So I took a loss today in GBPUSD trade.
So I just came back to look at the trade that I took here, and just to my own greatest surprise, I've been stopped out.
We are here to review the trade, see what we did wrong, what we could have done right, and most importantly, how you can benefit and learn from this my mistake. So let's go ahead and break down this trade and to see what we actually did wrong here. So first of all, you see this market is in a downtrend right here. Got in a downtrend, actually doing this. So my first criteria for wanting to take this trade from here was because we were currently pulling down. And my second criteria was because you can see we moved from here, which I already marked liquid. Then if you pay attention to this, you'll see that this market actually this place swept liquidity. So we pull it here. This point was what caused this market to shift structure to the downside. So that was very important for me. So I had to mark out that area. Even though this place is not an order block, this is another point. This is the first thing that actually disqualify this trade that I took. This place right here, that is not an order block. That is first of all not an order block. So the reason why this is not an order block, you can clearly see all these candles here have been used to push price down. Apart from this other one here that didn't have enough strength to hold the market. See that? This one didn't have enough strength to hold the market. Apart from that, the rest of the other candles were used. So that was the first mistake I made. Now the second mistake I made, if you actually go down to the lower time frame, you can clearly see that after the market hit this my supposed order block here, it it's changed structure. Everything, of course, you can see this swept liquidity here went up, gave me this structure right here, then broke it. See, that was a clean break. So after I spotted that, I thought the market is good to go down. So I placed my trade, of course. This is what actually caused that. So this is a very clean candle, not the use swap liquidity there. So I thought the market was gonna use this and push down, but the market did this. And now what was the cause of this? This particular day I took this trade was on Tuesday. This was a Tuesday trade. So what happened on Tuesday was CPI came out on Tuesday. So if you notice closely, you will see that I was triggered in here at this point here. Alright. So after I was triggered in this is a 2 hours candle, I was triggered right here. So I left the trade and I went out thinking I'm good to go. The market should be doing what it's supposed to do. But immediately that CPI came out around I think that was around is it 2 o'clock Nigerian time. I think 1 o'clock Nigerian time if I'm not mistaken. This huge spike to the upside happened and I was sick.
Actually, very painful because I didn't realize that there's CPI news today. I didn't check my news calendar, and that actually cost me a lot.
Losing a trade is painful, but it's not all about losing the trade. What do you do after the losses? Like what we just did now, we've reviewed the trade, we've actually seen what we did wrong, actually how we could have done it right, and possibly how we can do it better. It is actually a very important aspect of trading where you bring out your losses, you face them, you digest it, and you actually find out what you did wrong. It's not all about some gurus or traders who want to hide their losses. I don't. I'm a trader and I want to grow. I bring it out and look at what I did wrong and look at what I did right. I see how I can improve myself. I think that is the most important thing that stands out in the losses you take. So with that being said, I'll see you guys in the next one.